Carter, the entire market was under pressure this week, and you're taking a look at a handful of charts that could actually spell more trouble. What are you looking at?
Try to find some levels. I mean, that's it. When something goes down or up, you got to find a reference point, see where you've come from and where that might imply where you're headed. I've drawn some lines, and let's figure it out together. So this is a one-year chart of the S&P 500. No drawings, no annotations by me. Let's move it forward. What we know is that this minor uptrend of the past 2 or 3 months has been broken, and you can see that quite clearly here, right? We have broken that line. Okay, let's move on. What's the next reference point? The next reference point, and we stopped here, this is what Grasso was saying today, and we held right at that line. Second reference point. Finally, let's keep going. Third reference point, were we to just simply come down to this trend line, whether you this way or draw the lines another way, the tops from which we broke out, put them all together, were we to simply come down to this reference point, this would imply 2,800. Again, we're only down about 2.8% peak to trough. That would be about a 4.5% decline all in. How does that stand in comparison to the declines of the past 6 months? Well, last chart. We've had a 4.5, we've had a 2.4, a 3.5, a 2.1, a 1.8. Were we simply to get down again to both the tops from which we broke out and the trend line, it would be about a 4.5% move. What's so funny is that's nothing. And yet here we are, and rightly so, talking about, my gosh, so much has happened. Nothing's happened. This is a garden variety. But the main thing I would point out is this, that we are back below the highs of January. That is the issue. We never really got above that. And finally, the equal weight S&P never actually did get above this level. My hunch is we're not just going to be done 2 days of selling. More to go.
I'm a huge Carter. You know, he does that show every Friday at 5:30. That options action. He's fantastic.
But it's weird you have to bring it up every time as if you almost don't believe yourself.
No, it's because every time he comes on, he's better than the last time.
Is there going to be a question here for Carter?
There is a question for
Carter.
Because he almost answered the question. If we do, in fact, break that line, will technicians such as yourself say, you know what, there's a very good chance, although not perfect, we put in a double top in the S&P from the January high?
Right. So let's put that in context. If you were to say where we are, the S&P itself got above that high. But again, the equal weight did not. And only 3 sectors of the 11 actually are above that January high. New York Stock Exchange Composite is not. The mid cap is below. That is the key issue. Are we basically, now it's never going to be to the penny. Can you go a little above, a little below? But are we basically contending with, stuck at that blow-off peak associated with record inflows by retail customers into ETFs? I think so. Stuck at the top.